Good evening and welcome back to Be Rich. Today, my nephew Shashwat Swaminathan is here. It's a Christmas break for him in university, so he is here for some time.
And another key point which we look at while looking at small caps, which you told me to be very careful about, is promoter holding
Yeah.
and how the trend of promoter holding goes.
Yes.
So you said that it has to be bare minimum above 60% holding in
Yes.
small cap companies.
Yes.
So that brings me to a question. What if you find a great bargain where a promoter has less than 60% in holding?
If he is less than 26, I don't even look at it.
If less than 26%,
See, Karnataka Bank and South Indian Bank are exceptions because
banking regulations.
banking regulations.
Right.
But if there are no regulations
Yeah.
and the promoter is less than 26, I won't buy it.
So he has no business being that diluted at that
Yes,
size.
exactly. It's a small company.
Right. And that brings me to the flip side, because with Sinclair and GSS, I saw this
I
happening.
think one of the Finolex twins also you bought it at that price.
Finolex cables, yeah.
Yeah.
And we also, so we'll come to that because that's that doesn't, I guess, fall under the same.
Yeah, it falls under a special situation.
Yeah.
If you are going to discuss the American Express method,
Yeah.
that's what you are going. There are three methods in that.
Yeah.
One is, of course, this is Buffett before he became very big.
And paired up with Munger.
So we are talking about three different distinct styles.
Yeah.
One is the style of investment.
Yeah.
Another is the special situation style. And the third is when he first tied up with Munger and bought Seas Candies.
Right.
But this is the, you can correlate it with what we did.
Yeah.
And this is what we did.
Right. And so coming down to the question of book value. So when you're looking at book value for, let's say, a bank, how come you are able to find more banks for trading under book value than you do companies trading for under
you
book
can
value?
find companies also.
Okay.
But the problem is, how do you treat debt?
Right.
The bank is always leveraged, so you know the RBI will take care of it.
Yeah.
So we don't look at debt. And so the book value of the bank is basically what is the loan asset of the paper.
Correct.
But here in the case of companies in India, when a company has debt, I don't touch it unless they are the Tatas.
Yeah.
Unless they are the mighty
That's a fair policy. Yeah.
Unless they are the mighty Tatas.
Yeah.
I don't look at them at all. I don't consider them at all seriously.
Yeah.
Because they can go bust anytime.
Right.
Like you had Vijay Mallya going bust, very big family.
Yeah.
You had Anil Ambani going bust.
Yeah.
So somebody with loads of debt, I don't touch.
Adani is an example now.
I don't know.
Yeah.
We wait for it to happen.
Yeah.
But debt is leverage is something I don't trust.
Syntex is another example.
Syntex, where I burnt my fingers, is a big example.
Yeah.
So when without debt,
yeah,
then what happens is, normally Indian stocks are way above book value.
Right.
They are 4 or 5 times above book value. So I am not able to use book value as a measure.
Yeah.
These GSS Corp.
Unless we look at small cap.
Yeah. This small cap, this is a good example.
Right. So when it comes to debt, value investors in the US look at debt to equity ratio. But what you taught me in terms of looking at companies was look at next to zero debt.
Yes, I only go for next to zero debt.
Yeah.
Because I knew that in this interest rate hike was coming.
Yeah.
And this hike would continue for this year.
So this is what Irving Fisher talked about, right? When you have hiking, an interest rate hike, the real value of your debt goes up.
Yes, it does.
So it becomes harder for you to pay back the debt.
Yes.
And even if you are in a great position, if everyone around you is in a poor position, you are going to be in a poor position.
Exactly.
So, okay, that's fair. But do you ever think that debt to equity ratio as a measure is something which you might consider and take a backseat on the zero debt policy?
I did in 2 cases.
Okay.
I did in 2 cases. The 2 cases were Tata Steel.
Yeah.
Where I kept, once it started falling, I kept accumulating all the way down to 300.
So the quality of the promoter is a big key factor in whether you take on debt or not.
Yes, because I knew that the promoter had so much prestige stuck with Tata Steel.
Yeah.
It was never a factor for me.
Yeah.
But the market didn't look at it that way. At one time, the net equity market cap of Tata Steel was less than the total debt. So they were valuing it at practically zero.
Yeah.
That it was as good as bankrupt. But I knew that Tata Consulting Services was making 10,000 crores cash every
Yeah.
positive every month,
Yeah.
every quarter, and a significant portion of it belonged to the Tatas.
Right.
So the Tatas were cash rich, and I knew that once a steel upcycle came,
Yeah.
Tatas would get out of trouble, and that's exactly what happened. During the COVID for 1 year, the prices of steel went up through the roof till the government artificially stopped them from
Yeah.
importing.
Yeah.
So that's where I made the exception and I made money. The other exception which I have made and I'm still making
Yeah.
is in case of Tata Motors.
Right. Now I want to talk about so there are some cases, rare cases, where there can be an intersection between a wonderful company trading at dirt cheap prices. So one example of this is when Buffett started heavily acquiring Apple stock in 2016, when the stock was trading at around $100 or $110, and the PE was 12.84, and the price to free cash flow was 9.66.
So he bought it at that price.
Yeah. And they were constantly buying back stock as well, Apple.
They were constantly buying back.
Yeah.
This intersection for me
Yeah.
happened when Infosys was available at 600 rupees.
Right, because of the turmoil in terms of rumors and stuff.
Yeah, the new CEO had come.
Yeah.
I thought the new CEO would deliver because the chairman was Nandan Nilekani.
Yeah.
So the price was at 600.
600.
The PE was very low at 15 or something like that.
For Infosys, it's quite low. Yeah.
Yeah. And then I knew the rupee was bound to depreciate.
Right.
So the rupee depreciated from 70 to 80,
84.
83 now.
Yeah.
82.8, 83.
Yeah.
And at the same time, the profitability of Infosys took off. And today it's at 1,500 rupees.
And even back then, they didn't have any debt.
They didn't have any. I don't look at companies with debt, period.
Right. And Apple stands to be one of those companies with very minimal debt. And Warren Buffett started picking up Apple in 2016.
Yes, America. See, the good news for Apple is it is a consumer franchisee. It has access to big huge of cash.
Yeah.
It's keeping cash somewhere else and borrows cheaper.
Yeah.
While its cash equivalent is earning higher money, it borrows cheaper. So whenever it borrows, Apple has not lost its way yet.
Yeah.
But unfortunately, there are companies like Intel which have lost their way. Apple has not lost its way.
And another great part about Apple is that it's not just the hardware which is making them money. When someone passively buys an app or a subscription in their app store, they get a cut of that.
They're similar to Apple, not Apple to Apple comparison.
Right.
An Apple to Orange comparison to what we did is, of course, the acquisition of ITC in a big way. Here you had a blue chip, which was spewing cash, which was moving away from tobacco, which was negative.
Yeah.
And though
they have a lot of household brands. Yeah.
And though tobacco was still dominant in terms of net profits.
Yeah.
You had it beaten down to 12 or 13 times earnings.
Yeah.
We saw it as cheap as 130 rupees. You can compare that Apple purchase with ITC.
Right. Yeah. They produce Classmate notebooks, which is something which I religiously use.
Not only Classmate notebook.
Firma, Ashirvad.
Firma, main thing is their brand is Ashirvad.
Yeah.
They have a brand called Sunfeast.
Yes.
And they regularly are buying up FMCG brands.
Yes.
So I think 10 years from now, or even 20, 37 years from now, their FMCG business will be equally profitable like their cigarette business.
Right. Coming to the point, so I want to finally wrap up the cigarette butt discussion. So when looking at...
We have moved away from the cigarette butt also.
Yeah, we're now treading into the area of what Warren Buffett does now, which is buying companies at fair prices.
So basically what he did is when Charlie Munger joined, instead of looking at prices below cash flow, he looked at good companies at fair prices.
Exactly.
He was looking at fair companies at good prices.
Yeah.
He was looking at good companies at fair prices.
Yeah. In multiple of his annual reviews, he says wonderful companies at fair prices.
At fair prices. This is because he has a larger
amount of capital.
Yeah. And this is my public persona.
Yeah.
I talk about these companies publicly.
Right.
I don't talk about my small cap purchases because I do not know whether it is correct for them.
Exactly.
So These are buying.
Because at the end of the day, there's still quite a bit of risk involved.
There's a lot of risk involved.
Yeah.
So what you do is you tend to play safe.
Yeah.
And you tend to buy great brands at
Fair values.
at fair value.
Yeah. And so that's what I wanted to come down to, the advice for the general investor. I don't think the cigarette butt discussion is something which the general investor is looking to compound money.
No, he should not be looking at small funds. He should be looking at safe places,
Right.
like what we did with Infosys,
ITC,
what we did with ITC.
even Karnataka Bank to some extent is quite
Karnataka
good.
Bank is a great thing,
Yeah.
which I did publicly say.
Yeah.
And look at buying stocks which are having dollar earnings at substantial discount to their peak prices.
Right.
One of the stocks which I've been talking, stocks which I've been talking up recently,
Yeah.
is a similar case. One is Natco Pharma,
Yeah.
which is at 100 times earnings, is now at 50 times earnings. I expect it to drop further. It's a chance to accumulate.
Yeah.
And the other thing, which has very negligible debt, the other company which I've been talking up is Dr. Reddy's,
Yeah.
which is, though at 4,000, is available at 23 times earnings of its price, available at substantial discount. The stock has not done much over a period of time. And another stock which has cut deeply is Divi's Laboratory, which has fallen quite a bit. So I am looking at these three stocks. The stock which I bought cheap, like Infosys, which did very well and has become slightly cheaper, is Tech
Yeah,
Mahindra.
Tech Mahindra, we actually got it for dirt cheap during the pandemic.
Yes.
For much better valuations than Wipro actually.
And then Infosys also.
And we completely blew Wipro and Infosys out of the park in terms. The valuation for Tech Mahindra was around a PE of 10 or 11 when we bought it.
So Tech Mahindra was another big winner.
Yeah.
But these are good companies at fair prices.
Right.
These are not cigar butts.
Exactly.
Now,
and a cigar butt is not something which the general investor should be looking at even anyway. And there's a reason why Warren Buffett also decided to move away from it.
And he simply today cannot afford.
Yeah.
Because if he says I'm interested, people will all pile in.
But you need to also your time matters. Unless someone who's looking at this has a lot of time.
It's not only time.
Yeah.
More than that, you require you need to be a small pool player.
Right.
If you're a big pool player, if you go and buy, market will push up. The very fact that Buffett is buying will push up the price out of the park.
Right.
The other thing which I wanted to discuss is the American salad oil controversy.
We will do that in the next part.
Okay. So this is what it is, and this will come out as two parts. I think we did a long discussion. It will come out as two parts. One part, of course, is the bargain deals we did. The other is what I thought was great companies at least at fair prices, if not less than that. Thank you for watching Be Rich. I hope you enjoyed this content. If you did so, like the video, subscribe to my channel and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Be Rich. I want to thank all of you for supporting our event in Oman with great enthusiasm. A lot of people turned up in Oman, and a place where I don't have much influence. I wish to thank all of you for your support. The next event is going to be in Qatar, Doha. The event is scheduled for the last week of January. Those who would like to meet me in person in Qatar, Doha, or come to our event in Doha can send their request to the mail ID given below or contact the WhatsApp number flashing on the screen. My team will respond to you. See you in Qatar in the last week of Jan. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.